Time now for the word on Wall Street. Top investors watching your money. Joining me now is UBS Managing Director, Senior Portfolio Manager, and Private Wealth Advisor, Jason Katz. Also with me is John Lonski. Jason, let's go ahead and start with you. Futures trading suspended right now due to that glitch at the Chicago Mercantile Exchange. That was caused by overheating at one of its data centers. So stock indices, commodities, treasuries, foreign exchange, all disrupted. The markets were closed for Thanksgiving yesterday, but investors were certainly optimistic on Wednesday. All three major indices notching 4 straight days of wins, boosted by rate cut hopes from the Fed and AI trading in stocks as well. The Nasdaq on track for its best Thanksgiving week since 2008. All three major indices up year to date. The Nasdaq up more than 20%. Big tech and AI stocks moving as Alphabet is giving Nvidia a run for its money in the AI space. The president touting market records and trillions of dollars of investments in the U.S. during his Thanksgiving remarks to American troops. Watch this.
We're going to be having close to $20 trillion invested. That's record-setting by 10 times. Nobody's ever had anything like it. We're building plants. We're building factories, auto factories, AI plants. We have the stock markets just hit for the 48th time an all-time high during the 9 months that I've been here, a little more than 9 months now. And so we have the hottest stock market ever. That's a big thing for 401ks. But it's 48 times in a little bit less than 10 months. 48 times we hit an all-time high. And I think we're going to continue.
Jason, your reaction.
Look, I'm not surprised to see a snapback in technology. You have this buy the dip crowd. You also have the FOMO group. I mean, they've missed this rally. But above all, you have all these underperforming professional money managers this year that have no choice to play catch up. And then lastly, you have seasonality. This is obviously a very good week to be invested. The truth will have to meet the reality come the next few months. And I do think that reality will be higher stock prices.
Okay, John, President Trump revealing another way that he might use tariff revenue to help the American people. Watch this.
Because of tariffs, and we're taking in hundreds of billions of dollars like we've never done before. And some of that's going to go back in the form of a sort of dividend to our people, but much of it's going to go toward reducing debt. And what it really goes for over the next couple of years, I think we'll substantially be cutting, and maybe cutting out completely, but we'll be cutting income tax. Could be almost completely cutting it because the money we're taking in is going to be so large.
John, your reaction to the president's proposal.
Well, first of all, if you want to have further reductions in income taxes, maybe it's high time that you begin to see an increase in federal excise taxes on consumption, though maybe I shouldn't say that. That's going to upset some people. He's talking about this dividend that we're getting from tariffs that he wants to distribute to Americans to try to have it so that Americans can better cope with affordability issues. Well, that's all well and good. However, the risk is that by providing Americans with money and where the people receiving the money are not producing anything in exchange, we could be looking at an increase in spending relative to supply. And as they tell you in Economics 101, that can only lead to even higher prices.
We're also watching yields impacted by this CME glitch. The futures market, meanwhile, pricing in an 85% chance of a rate cut at the December Fed meeting. Fed Governor Stephen Miron telling Maria he will be pushing for a half-point cut. Watch.
I think it's the right thing to cut interest rates rather quickly. Now, I think what you'll see on the rest of the committee is that the labor market data that we got recently, I hope will move people in my direction of thinking it's appropriate to continue cutting interest rates.
Jason, it is the expectation that there will be a 25 basis point cut in December that got that market rallying a little bit as we went into the holiday. Your thoughts on if this is going to hold and if the odds on that rate cut is really all this market needs right now to continue higher?
The markets, Jackie, are hyper-focused on not only the rate cuts, but who our next Fed chair is going to be.
Yeah.
Before last week, odds dropped below 40%. We're now at 85% for that 25 basis point cut. I don't know if in my 30 years I've ever seen this kind of volatility and expectations for rate cuts in just a few short days.
Yeah,
so
I hear you.
I think that it's not a matter of if, it's a matter of when in terms of these cuts.
All right. I also want to get your take at crypto prices, on crypto prices this morning. Bitcoin's back above 91,000. We saw a little bit of a pullback in recent days. JP Morgan still predicting Bitcoin could climb past 240,000 if you want to hold it long term. This is as the digital asset moves away from speculative trading and, quote, behaves like a macro asset, according to the banking giant's latest note. Your reaction to that, because the pullback that we've seen feels pretty real.
Oh, from peak to trough, it was a major correction. Look, make no mistake about it. Crypto is a lot of things. One thing it is for sure is a risk asset. And the new wrinkle keeping investors on edge is the deleveraging. You have a whole new constituency of investors in crypto that levered their high quality stocks in order to buy the asset. And when all of a sudden margin calls come, what are they selling? They're selling the NVIDIAs and their other high liquid stocks. So I don't think, fortunately, that most crypto owners are levered. So I don't see this as an enduring factor weighing on equities. And I do think that it's going to find its footing, crypto prices, that is, at or around these levels.
All right. Jason Katz, thank you so much. John, you'll be with us all morning long.